All right. I'm here with Danny Davis. He is the CEO and founder at HyperFi. How's it going, Danny?
It's going great, Steve. How you doing, buddy?
Doing good, doing good. So before we unpack your multiple exits here, let's talk about how you got started. What's your
Sure.
background and how'd you get kind of ramped up into business?
Yeah, so my background is I actually originally wanted to be a dentist. I always thought it was like the way to be a doctor. And soon I realized that I did not want to be a dentist. And I realized that I kind of loved money and business more than anything. My nickname was the Alex P. Keaton of the Inland Empire. So if there's a Family Ties reference for some of the older audience. And so I realized that I liked that and I started focusing on that. And I came right out of college into the dot-com world. And I started working for a dot-com right in 2000, right when things were sort of going up and down at the same time. And I parlayed that from there into probably about 13 or 14 years of enterprise IT tech software experience. And I also think it's a mistake. So I will advise to not stay in corporate America that long before starting your first company. That's probably the mistake I made, but I did parlay that, and I started my first real company when I was about 33.
Okay. Okay. And what was that? What was that first one?
Yeah, so that company was called Convectium, and it didn't start as Convectium. It's a random story. I had appendicitis. I was in the hospital and I was reading the news, and in the Wall Street Journal that day it said China set to disrupt the vape industry with all kinds of different products. And I thought, well, that's a weird thing. And I started investigating this bizarre industry. And I had made some small investments in some companies, some notable companies like Uber and others, but I didn't invest enough. I didn't invest early enough. So I was doing okay. But I saw this opportunity to invest in a space that I think nobody was really touching at the time. And I thought maybe I could disrupt something that was taboo, right? All my venture capital partners, friends, they weren't touching that industry. There was no institutional investment, so I thought maybe there was an opportunity. And uh, and so sure enough, we identified a niche. And so one of my pieces of advice is probably the same as most, which is if you can outpace a particular industry just with some keen insight. There's a great book written by Mike Maples, Pattern Breakers, and he talks about this, which is keen insight. And we had some keen insight into an industry I knew nothing about. And it turned out it ended up becoming cannabis industry, and it ended up becoming infrastructure in cannabis. Now, I don't use cannabis. I was never in infrastructure before besides IT. And so I had a large learning curve, but I did have some insight, which was nobody else was doing this. There wasn't enough money to fund what other people were doing. And we found a niche, which was filling systems. And there really was no filling system at the time for all these cartridges that were going out. So back in those days, when we're talking about packs and all these pods and all this stuff that existed, there's really no filling mechanism for them. So a lot of the work was manual. And so what we identified was a keen need, perfect timing. If we had done this 2 years earlier, it wouldn't have worked. 2 years later, it would have already been saturated. And we identified a need, and we basically patented the world's first filling system for cartridges and turned that into a hardware and software play. And I don't know if I'm stealing too much thunder, but we eventually took that company public in 2018 through a reverse merger, and we're one of the first, hardware and software companies accepting Bitcoin back in the day. I mean, we started accepting it in 2014. And so we tried to turn our tech company, tried to inject all my tech experience into an industry that basically was lacking a lot of tech.
Mhm.
Yeah, we took it public and I exited in 2019 to do something else.
Very cool. Very cool. I like that. That it became almost like an investment vehicle in a way through Bitcoin, where if you're accepting it, putting it on the balance sheet, there's a lot of value there. From 2014 on, definitely, definitely some value of just sitting on
Yeah,
it.
well, listen, there's some lessons to be learned. I mean, look, I tried to buy Bitcoin in January 5th of 2013, and it was $24, and I couldn't figure it out. It was so complicated. At some point, we were like, you know what? Let's just do business. Let people pay with Bitcoin. It's too complicated to buy it at this stage. So, major mistake on my part back then. Uh, we were then asked to take payments as Bitcoin or as cash. And we chose the cash option because we were a startup and we were trying to generate cash. Another big mistake. We never knew where it was going to go. But we did grow with that business and we did learn a lot. And one of the things that I think was paramount was my sort of the thing that I didn't like about running the company was I didn't really understand the components of running a board. And when I left that company in 2019, I had a different strategy for where I wanted to take the company, and the company wanted to go one direction, I wanted to go the other, and so we parted ways amicably. And I did a separation agreement, still owned I think 25 million shares of stock on the company, and left the company. And as soon as I left, I started to see the writing on the wall that you hand it over to some Boston bankers, and it changes the trajectory of a business. And so, number one, if you're out there watching this and you don't control your board, or you don't have strong relationships with your board, and you don't understand the mechanics of having a board, do that now. Like, get some friends on the board, get some people that are true advocates for you and the business, and really understand where you want it to go. Because number two, the other lesson is, I only invest in founder-led companies. I do not like when a founder leaves the company. I've yet to see a company where people go, wow, the company's much better without the guy that or the woman that started it and ran it. And I still, to this day, you could use any example. I still think, despite all the controversy, I still liked Uber better as a Travis company. I still like, I really enjoy founder-led companies because of the energy. And most people think I'm younger than I truly am just because of founder-led energy. So I think that's probably my two pickups, which is, continue the company as a founder-led company, or the investment you believe you have in that company could go to a much lower value than it is when you're there. And number two, make sure that you are aligned with your board, because if you're not, disasters happen. I mean, you can see what happened earlier last year with OpenAI, right? Truly one of the most remarkable companies on the planet, trying to oust Sam Altman on nonsense, right? And people revolting against it, and they're a stronger company. Say what you will about the way that the company's built, but a true founder-led organization, and another lesson to be learned. Even at I'm this big compared to an OpenAI, right? And the same lesson to be learned. So
yeah.
Control your board, keep it founder-led, right? Those two things are very, very probably hit home for some of the people watching this right now.
For sure. Well said. So that's a good transition into preparedness. So, taking something public through a reverse merger, that's like mental gymnastics, and financial structuring on its own accord there, that you'd have to learn all of that. But in terms of a regular sort of, let's call it preparing for a process, all business is different, all industries different. But from your take, what are some steps that people can take to prepare themselves and their business before doing something like a...
Yeah, this is a fantastic question. Sorry to interrupt. It's a fantastic question because right before this call, I hung up with Vanta, right? And Vanta is a SOC 2 compliance platform. Startups use it, enterprises use it. Why would a startup want to be SOC 2 compliant on like day one? And the reason why is because going through an audit process 2 years into a company and going backwards is an absolute disaster. And if I can make a joke for a minute about the cannabis industry, imagine my audit process to go public as a cannabis infrastructure company. Keep in mind, we didn't touch plants, we didn't do any of that. We simply built machines and software, and half of our customers paid in cash. Right, so you're selling $30,000 machines, and people are coming in with, racks of hundreds and paying for machines, right? And then you're supposed to do an audit on that, and it's really hard to do that. And so I think security and compliance, number one, especially in the day of AI, where you can pretty much fake anything, is paramount. So if I could recommend this, I'm not paid for this, but I would say a promoted plug would be use a company similar to Avanta. There are many others out there, but SOC 2 compliance, things like that, being auditable from day one, even as a startup, even as a, if you're, let's say you're a late stage startup, you're in year 3 and you haven't even thought about this, I would say stop everything you're doing, go invest the money. They even have third-party companies that will do it for you. And by the way, this is not a plug for any security and compliance. It's the last thing I want to be doing, but it's probably the first thing you need to be doing. It feels like taxes to me. It's the last thing you want to do, but the thing you have to do, right? And so that's probably my feedback there is compliance and regulatory to get started now, because going backwards, it takes a really long time, especially if you're in an industry where speed to market is important. I mean, you may not be able to have some of your customers without the right level of compliance. So just keep that in mind as well. So the other reason there is if you're dealing, HyperFi, our new company, deals with IT procurement. We sort of automate a lot of processes. Our goal is to get rid of RFPs and RFQs forever, right? We don't like RFPs. Nobody likes writing them. Nobody likes doing them. So we sort of turn every process into an RFP. Well, if that's going to be the case, the first thing you want to do is make sure that the answers are correct and compliant and regulatory, and pass regulatory. So many of these companies will not do business with you unless you're SOC 2 compliant. So there's another reason to justify the work there.
Yeah. Yeah. And moving to timing now, I like you mentioned briefly, I want to double click on that. You said if it was 2 years earlier, it wouldn't have worked. If it was 2 years later, it would have been too saturated. And I think this captures timing quite accurately here. So when is the right time to sell? It's a very broad question. Everybody's different, but you've done this multiple times. So why was it the right time for you guys to exit when you did?
Sure. So with Convectium, I think, the reason that I left at that time was I wasn't being able to, I couldn't grow as fast as I wanted to grow with the constraints that were being put on the company with, a new round of investors, a new board that didn't clearly understand the market. So I sort of did it at the right time because it was the right timing for me personally. I'd been doing it for 6 years. I figured I couldn't go much further with that platform. And constraints were put on me. So I was forced into timing that already had sort of made sense to me. And they made an offer that made sense so that I didn't have to do anything for a very long time and could sort of figure out what I wanted to do next. But like a true sort of overworked person, I decided to just start another company right away. And for that company, we developed a really interesting software platform. And we have several patents. We had several patents in blockchain and logistics and supply chain intelligence. And we sold that company for less than we wanted to. But the timing was right because the partner buying it was good. And I wasn't having fun building anymore as part of it. And so what I really wanted to do is sort of rediscover what made me excited to get up on a Monday. If you get up on a Monday, or if you dread Sunday night, you're doing the wrong thing. I can tell you that a million times. I mean, I know it sounds ridiculous because it's cliche, but what I'm building right now, as hard as it is, and the humility, the humble moment is, no matter how successful you are, it's still hard to raise money, right? It's still hard to get good money from good people. So we're going through this fundraising process, and we had companies that wanted to fleece us and acqui-hire us on day one and all that stuff. And what we learned is, timing is only right when it feels like you're doing the right thing for you. And so if you're being forced into a situation, it's not the right time. If you feel like there's more value there, we've heard the stories about Zuck, and we've looked at all these different companies that didn't sell. We thought $1 billion was great. Now you look at Facebook and say, man, they would have been crazy to accept $1 billion. But back then we thought it was crazy, right? Netflix, and Blockbuster. I mean, that deal is now the most laughable deal that they offered up. That they were barely asking for, I think, 100 million, and they thought it was crazy, right? So I think most of the timing for these situations is, how do you feel in the moment? Are you excited to build? Are you excited to grow? And if the answer is no, it's your time to exit. Even if it's for less money, get out and restructure and rethink and get a new partner. In my new venture, I have a new, very technical co-founder, and I didn't have a technical co-founder before. And I can tell you it's made my life 1,000 times easier, right? So sometimes it's stepping away from one thing that you were doing while it was successful, you weren't enjoying it, and into something new that's harder. We're tackling a much more difficult problem. What we're doing is so intense that pitching to pre-seed companies, it's almost like we have to spend 30 minutes just to educate them on an industry and a process. So you're right. Timing is everything. So for me, first venture timing was good for me personally. Second, I took less money because I wasn't having fun, and now I'm building what I think will be the best project I've ever built, but it'll take the most time. So
Nice.
there's sacrifices on both sides, right?
Yeah, yeah, and you briefly touched on it there, and this has come up a lot on the pod, where you started a company right away, right after the exit, and there's definitely something there psychologically of the type of person that you become when you're building businesses, where you're moving quick, you're enjoying the journey, you don't really realize it most of the time while you're doing it until it ends.
Yeah.
And then you're like, wait a second, like I enjoy building things. I need to do this again. And the thought of sitting on a beach, like the cliche kind of sipping Mai Tais on a beach, is terrifying. Like
Yeah.
just sitting
So
there.
I'll tell you. I mean, this is the funniest story. I tell this to people all the time. I remember when I exited Convectium, I signed my settlement agreement and separation agreement and kept all my stock, and everybody thought like this guy is going to retire, right? And I remember it was a Tuesday afternoon. It was like a couple days later. I was walking around the neighborhood. I was holding hands with my wife. We were just going for a walk on a Tuesday afternoon. It was 1:30 in the afternoon. And she said, "Isn't this nice?" And I said, "No, this is my worst nightmare." And she was like, "What?" And I said, "I can't do this. I'm not this person. I didn't take vacations before. Like even when I go to Maui, my vacation, I take a laptop with me, and to like the little bungalow or the bed or whatever, I take a laptop. I go swimming, I come back out and check my email." Um, I think obsession is, the passion that you have for life is part of just a personality. Is it the passion you have for your partner and the passion you have for, going out? I love festivals and I love to travel, and not in a cliche way. I like to go to festivals with friends and do this really cool, experience. And for a person like me to take off that much time is not possible. So I'm neurotic, right? I'm at an event checking my email, trying to get coverage. I mean, like everyone else is having the time of their lives, and meanwhile, I'm enjoying the music, but I'm neurotic about, did this happen? Did this process, complete? Is this customer signing on, right? And so I think my biggest piece of advice is, if that's your personality, embrace it. Stop trying to listen to I just need 3 side hustle TikTok videos where I can just sit and do nothing and get paid. It's not a thing. People that make the most money work is hard, the hardest, and they may not be physically working, but trust me, mentally they're exhausted every day. I've never met a millionaire. I've worked for 3 billionaires. I was a chief of staff for 2 of them, and I've never seen people work harder, longer hours in my life. And everyone else, meanwhile, thinks they do nothing, right? They think, they just assign it to everybody else. So if it's who you truly are, just embrace it. Be that. Just know, have a good have a good life insurance policy for if you have a heart attack. But other than that, it's the only advice I can give. It's who you are, and no matter how many tokes of weed that people take or mushrooms or whatever it is that they do to calm themselves, it's not gonna die down. You just have it, and it's innate, and it's the coolest thing ever. It's probably annoying for people in your personal life, but it's a skill that most people wish they had, because it can't be taught, right?
Yeah, yeah, and for those out there listening, you're not alone. It is a common thing, a very common characteristic amongst entrepreneurs. Some of the most brilliant and greatest builders of the last generations were like this, and it is a common trait. So you're not alone if you're listening to this out there. It's not.
Yeah. By the way, Steve, people don't invite me on their vacations because I stress them out. Right? They're trying to relax, and I'm neurotic about where Wi-Fi is and connections and stuff. I just think I'll always have that, and
Yeah.
and so I hope your audience feels comforted in the fact that if you're going to be a leader, I think this is a Colin Powell quote, but if you're going to be a leader, prepare to be lonely, because some other people don't quite identify with that level of passion and dedication.
Yeah, yeah. So let's talk about negotiations and valuations. I'm sure everybody listening to this is eager to hear this one, just because stepping forward with your best foot forward is a challenge for a lot of people. All businesses being different, all negotiations being different, but what can you share about how you approached it and some tips?
Sure. So for me in the first company, it was easier because I started everything on my own. It was all me. I had a co-founder for a little bit, and he took a buyout. He was happy, but it really wasn't his full-time gig. He was just investing in the company to be part of it. And as I went out, I owned the majority of stock in the company. I owned the majority of control on decision making. I had super voting shares. So for me, it was a lot easier on the first company. Once we went public, I started to lose control and started to lose, board control. And although I was the chairman, I stepped back as CEO. Was a mistake. And so my negotiation was aggressive in the end because I was leaving because I just couldn't build, and so I became sort of frustrated with some of the process. And so I think when you've been running a company that long, you have a little bit of leverage. So I had leverage there. I think in the current situation, let's think about exits and also the beginning of the new thing, right? So you make an exit, whether you have a lot of negotiating power or not, you can parlay that into your next venture, which is if you're a multi-exit founder, use whatever leverage you didn't have in the previous company in your new company, right? You're now a founder with an exit. You now have shown that you can weather the storm. You can get investors their money back or multiple returns on their investment, right? That carries a lot of weight. Those people will now invest with you again. When you invest and when you build the second time, or when they invest in you the second time, you now have a lot more negotiating power. So sometimes you do the first deal just to do the second deal or the third. And so I think that's where we are now, right? We are raising a pre-seed round that's pretty significant. And if you look back in time, pre-seed rounds typically were not being raised at this number. AI has sort of helped accelerate that. But we're raising. And the reason why we're able to raise at a higher valuation and a larger chunk of change is because we're multi-exit founders. My co-founder is also multi-exit, right? And our terms are more aggressive. We don't have to take that deal that's super attractive, right? Those deals that come out initially where people say, hey, we'll give you a bunch of money, but we want more control, we want more votes, and all, we don't have to do those deals. And so I think what you're getting at is the power to say no. And not only no, but also yes. And so I always say true freedom is this. And I don't even know if I've yet to achieve it, but true freedom is the ability to say yes or no to any question ever asked of you, which means if someone is asking you to go with them to France on a private jet, to go have lunch and meet this person and go to this event, right? The power to say yes to that is amazing, right? You've got the money, you've got the time and all that. I think the more powerful piece is to say no. And the reason you're saying no is not because you can't afford it, not because you don't have the time. The answer is because you have an alternative that's better than that option. And so if you have a powerful no, it's way more respectable than sort of a weaker yes. And so in this situation, we are raising money, and when companies are saying, hey, would you take money at this, or would you do this to get the deal done to make it easier for us, we say no. Because although it's attractive in the short term, it's a long-term issue. And so the power of no is much more powerful than what everyone believes, which is, I just want to go to a beach and lay on the beach and fly to this place and hang on my buddy's private jet. That's freedom, but that's not true power. And I think power is in the no. So I think that's the best piece I could say for negotiation.
Well said. Power in the no. So that takes us to the finale. Knowing what you know now, what would you tell Danny 10 years ago?
Man, I would have said only work in corporate America for a couple years, identify some problems, and go get some friends at Stanford or wherever else to solve them. Silicon Valley really likes that. The other piece I would say is if you're into something with your gut, don't sell early, right? If you think something is out there and it's interesting, you should really stay in it. Bitcoin, all these different investments are part of it. People just, their gut is that it's going to do well, but they're too nervous, they're too scared. The trick is, don't make it a big enough piece of your life to where it affects you to the upside or downside, right? So if you're day trading crypto to all the money you have in your account and you're trading on margin, and last Friday happens and you wipes out half your portfolio or more, it's because of risk. So you should not be taking risk that's so significant, and I've done some of this. You should not be taking risk that's so significant that if the downside happens, that it wrecks you for a very long time, right? Or for a year or 2 years. So if you're doing those side things, right, your side hustle, the side income stream, whatever it is, you can't have it be such a significant piece of your life that it actually affects it. So if you're into something, stay in it, but don't go all in unless you're ready, right? Because if you're all in, you put all your eggs in one basket, and it's not right, right? If the vendor is broken, we had a vendor at Convectium that was so bad that it actually made us lose a significant portion of our customers overnight, and we had to repair that. It took years to fix, right? So a vendor can break you. Supply chains, a problem happens, a pandemic, a shipping port closes, there's some docks, labor disputes. If these things cripple your business, you have to think about having what we talk about in IT as an N+1 or N+2 strategy, right? Your primary supplier and then your backup. But it should also be in your personal life. You should have that primary income stream and then a backup or that secondary. And even if it's a savings income that's not garnering a massive amount of income, but it's there and it protects you and it makes you feel safe. Those moments when everyone expects you to be super, super successful because you just made an exit, but you're also paying for 2 cars and 2 kids in private school and you have to diversify, because if you don't, you can head towards pitfalls. And so my best advice is that although I've done several things successfully, I was Loom's first customer, and they asked me to invest, and I would have been the first investor in Loom. And Loom sold to Atlassian for $1 billion, and my meager $25,000 at that time would have been worth $12.7 million. And I think about that, and we talk about that all the time with some of the founders, which is if you're early in on something and you got to find a way to do it. Right. I really wanted to do that. I just invested a bunch of money in other companies, and I didn't know these guys that well. I just didn't know it, but I felt like they were going to do the right thing, and I missed. And it's a big miss, right? Anytime you have something that's a 7-digit miss, it's big. When it's an 8-digit miss, it hurts, right? So I would say, hindsight is always 20/20, but there is always, for every single person I talk to, this is my takeaway, which is, for every person I talk to that has hindsight, they always had an inkling, right? They always said, I feel like this. I feel like this. I should have done this. I should have done this. It's never like they should have just done it out of the blue. No one just ever says, oh, I should have invested in Microsoft in 1983. It's like, well, okay, that's fine. But no one ever says, like, most often what happens is they bought Tesla, it went up 200%, and they sold it because they got nervous. It was too high. They got out. Meanwhile, now it's up, 10,000% from when they bought it, right? So I think there's some interesting concept here around, I don't know what the word is, but this stick-to-itness of your gut. And that's my biggest takeaway, which is the mistakes often happen when you sell yourself short or you get out too early. So stay in a little bit longer, find a way to do it. You'll be rewarded for doing so. And the ones when you try to cut corners is the ones that you look back and say, I should have never done that. So
love that. Like conviction. You got to have conviction to stick with it. It's really,
yeah. I'm a Raider fan, so unfortunately, conviction follows me even in misery.
Well, that's pretty much all the questions that I have. But can you tell us more about HyperFi? What stage you're at? I know you mentioned that you were raising money, and just kind of give us a high level as to what it is.
Sure. So, my selfless pitch is that I think for IT, low-hanging fruit for us is I've been in IT for a very long time, and that's software and security and cloud and networking connectivity. And what you realize is most of it is multi-vendor siloed, right? I compare it to like calling Vegas to ask for a hotel room to one hotel, hanging up, speaking to 3 new people at a new hotel, getting a price, hanging up. It's just not streamlined, and it never has been. And so what we set out to do is to essentially provide an RFP less experience where you can simply use an LLM to enter your query, and our partners then go out and provide pricing, research, and even procurement, real-time procurement for the ones that support real-time procurement on the platform. So we operate almost as a Booking.com meets cloud for dev, right? And so we're trying to solve a solution that is massive. There's a $1.5 trillion spend on IT spending, if you will, and it's a much bigger problem than I've ever tackled. It's very complex. The companies have tried it before, and I think there's another question you asked earlier, which is sort of why now. There is an inflection point here, and it's not just AI, but it's the agentics of AI talking to other AI systems, and that's really where the intelligence happens. So timing is everything. We couldn't have done this 2 years ago. We're still early in this process. If you see the press releases that come out, every networking company is still a little bit early, and so that's why I believe we have some insight. It's low-hanging fruit for us because we have customers we're already involved with. So some advice is, do you have customers you can use for your early projects? The answer is yes. Great. Number two, do you have product founder fit? Do you have to go learn an entire new industry? If you do, I don't recommend it. I've done it twice and I don't love it. So staying in the industry that I know. And lastly, do you have a team that can help you get there, right? Can you scale? And the last piece of advice I'll give you is the reason we're building HyperFi is because we finally understand the strategy of building a company, and it's Ben Horowitz from Andreessen Horowitz's strategy. We didn't even realize that we were doing it, but it's people, then product, then profit. And for those of you that are trying to do it the opposite way, it's broken. If you're trying to go after profit before you have great people building an amazing product, you're going to fail every single time. You might skim by, but you're never going to be super successful. So we're following that. That's what we're building. It's hyperfi.ai. We're in stealth mode, but yeah, we're super excited and off to the next venture. And I'm investing in the round. I'm putting my money where my mouth is, which always makes me excited and nervous at the same time for my wife. So yeah, we're all in, right? So that's the other piece from earlier. Be all in.
Awesome. Be all in. And where can people contact you and reach out to you?
Sure. I guess I could just use you'll probably have to edit this piece. You'll have to use my email address. It's danny.davis@hyperfi.ai. That's our current platform.
Right on. Right on. Well, wherever you guys are listening on iTunes or Spotify, the links will be in the show notes. And thank you so much for coming on and sharing all your wisdom.
Hey, listen, it's only wisdom through failure, man. It's only things that we've learned. I wish someone would have taught me this from before. So that's the last piece of advice: is teach your kids this stuff.
Amazing. Amazing.
We'll see you, buddy.